Guys, pay close attention to what I say. You don't have to do that now, right? But please keep an open mind about what we're going to look into in this movie. It will be a sign of a huge disaster that is about to happen. I am not joking. This will almost certainly come with a flash crash that you should try to get into if you can, okay? It all ends in Japan. Japan sets off the war. Things are about to go down. By the way, the charts make it clear, okay? There's also something else that supports this. It's just what I feel, okay? It's not always wrong. That's it. Also, how do we know this? When did the SEC do this before? Due to the recent rise in market instability, the SEC is cracking down on ETFs that use a lot of debt. It sounds like the SEC is stopping plans for high leverage ETFs and warning about the risks. Isn't that a little strange? 3 to 5 times leveraged ETFs, no matter what asset they are being put on hold. And the really cool thing about this is that the SEC got the call to pause. So buyers aren't trying to trade these ETFs with borrowed money because it's going to be a mess, right? Guys, if you're using these on pressure, you should either protect yourself or destroy yourself. You can guess that they're stopping or slowing it because they see something coming, right? That's why they want to keep clients safe. Hey everyone, it's clear that pressure is getting out of hand here. That's not true. It's kind of like the whole system is fine. You should know that, especially with the home market and all the other markets, right? Everything is being used up by debt and pressure. But look at this. It's not even that, I don't think, okay? I think they're trying to keep investors safe from something coming, right? As of now, they are telling everyone, and I could tell something was by looking at the charts. This isn't advice about money. Remember that Michael Burr says he thinks the market will drop for a longer time than in 2000, which lasted 31 months. When the market goes down, I don't think it will be like in 2000 when there were a bunch of stocks that no one was paying attention. These stocks will come up even if the NASDAQ crashes. I think this whole thing is going to fall apart now, says the end of the quote. Okay? Michael Burr is trying to go over old ground here. Burr's Burr is betting on a crash. I haven't seen him so guilty since 2008 when he was shorting NBS. Pay attention to this. Michael Burr, do you think we're going to be the next big short? Today's movie is going to talk about when the next big crash will happen. It all comes back to Japan. First things first, guys, he's all in, but Tesla is short, right? He is betting that the markets will fall hard and quickly. How long do you think this will take? I believe very soon, days to weeks at most. I don't think it will be even weeks. Does that sound like you? Why? This is the most important tip of all. Today, the yield on Japan's 20-year note jumps to 2.92%, which is the highest level since 1998. You can see this on the bar chart. By the way, this is a V-shaped rebound for Japanese government bonds. Okay, it started. For the first time ever, Japan's 30-year bond rate goes up to almost 341%. What? Wait a minute, guys. Greg Manarino told you and me that something is wrong if you see these rates and returns going through the roof. It's clear that something is seriously broken, guys, okay? And it's about to show itself to everyone. While yields are jumping this much, it means that the yen will get stronger, which will cause the yen carry trade to end. And it has happened before. I think it was in the summer of 2024 when the markets flash crashed. Take a look. There is a problem right now. How can we tell when something is broken? Now let's look at this chart again, this time for the Japanese yen. That's why I put it there. That's why I put the yen so high, guys. Okay? It's really important. That's the reason. Look at this then. The outputs are going through the roof. That's right. Which says they think the yen will get stronger against other currencies. This is the Japanese yen compared to the US dollar. Isn't there some kind of positive divergence? There is a regular or hidden positive divergence that is going to pop. That's how you should pop it up, right? Guys, this is how it goes when it goes. It's going to be, look at that again, 2024. Okay? Guys, it's going to happen again. Okay, I think that's about to happen. It takes place quickly right here. The markets went down. It's going to show up again. Tell me it's going to happen. This huge feeling is coming over me. Okay, it's pretty much right around the corner. Look at this now. We're going to check this out now. Yes, we're going to talk about Japan's interest rate prediction, which means you don't want the Bank of Japan to raise rates. If they raise rates right away, everyone who is borrowing money from the Bank of Japan or from Japan itself to invest in other assets will sell those assets, like Bitcoin and maybe even XRP. Everything okay. Everything is tied together with liquidity, and they're going to sell everything from stocks to everything else to pay back the loans. This is what people are betting on. Take a look at this. I think it was 0.5 the whole year, but December 19th, 3 a.m. If the crash does happen, it will happen all night. The Bank of Japan decides on interest rates. The amount they think it will be is 0.75%. You guys should see that it was always 0.5%. Yes? Their goal is to keep prices fixed so the markets don't crash. A lot of people think they're going to hike now. M, set off the alarm. Again, you agree to sound the alarm. If they do, that's really mean. Okay, which everyone is going to be running away from, right, to pay back the loans. This means that yields are going up, which means the yen is going to get stronger. You can look at the map right here, so you don't need that, okay? I think that when he tells the Bank of Japan to raise rates, the carry trade will end, okay? The series of events, that's for sure going to get crazy, guys. I think that's about to happen. Now, the big Japanese news outlet press says that the Bank of Japan is looking at the zero interest rate right now. They plan to walk. We know this because the charts show it. The charts always show what's coming up. On these longer time frames, how many strong divergences do we see? Besides the daily and 2-day ones, there have also been 3 and 4-day positive divergences, as well as a 5th and 6-day one. It's all set in stone right now if it stays above 0.063. Divergences that are positive go down. Don't even joke about it. Take a look at these 8 days. It keeps going. There will be no end to it. 9 days, right? The positive divergences will be proven if it just stays above this level, okay? 10 days, right? 3W every week. It goes up to 3 times a week almost. Not quite. I believe that 2 weeks is the longest amount of time that can be used here. Yes. Yeah, almost 3 week. Okay, guys. The exchange rates are about to end. That's why I'm going to keep telling this story until it comes true, because it will, right? As clear as day. Don't pay attention to me now. Listen to these other unique people who are experts in this subject. There could be a big sell-off in the US markets. Japan finally has positive inflation, so if they raise interest rates, it will be a boost. Businesses can make investments and grow, and people should spend money instead of saving it. They wish to keep it. They are now stuck between a rock and a hard place. Why? We'll get back to the chart soon. Please tell me what will happen in this situation. I'm in the 4th grade. No, really. I'm calling all bond experts. Okay, I hope this helps. What is that? The markets went through a huge explosion, right? Get in touch with your mom. Do you see this? This is a common economic paradox that makes it look like Japan is losing control of its money.